What's good, people? Welcome back to another episode on my channel. It is your boy Elijah. So today we're going to be talking about 5 mistakes that I really want you guys to avoid in the cryptocurrency market. These mistakes are applicable to anything when it comes to investing. So make sure you keep this in mind as you continue to invest in any market, from the stock market to crypto market to real estate to anything and anyhow you invest your money. So the first point today is do not invest money that you cannot afford to lose, right? So whenever you invest money that you are not willing to lose, it raises your stress levels unnecessarily, right? So you only want to be investing in things that you know for a fact that whenever you put that money away, you don't care about it anymore. Not saying that you don't expect to actually get positive returns from it, but if in the short term the money was to go lower than you expected, right, you wouldn't be panicking, you wouldn't be smashing the panic button. So you want to make sure that you're investing money that you can afford to lose, especially in a volatile market like this. It's going to continue to swing up, down, and up and down. And that's the beauty of the cryptocurrency market. The volatility is why everyone loves it, right? The volatility is a double-edged sword, meaning it's good for you and it's bad for you in certain cases. But experienced investors know how to play this game. And the second point today we're going to be talking about is not investing with an exit strategy. So what is an exit strategy? Simply, it is a plan to sell your financial assets. The goal of an exit strategy is to limit the losses in potential situations. So whenever you invest, there are 2 outcomes. It's either you win or you lose. An exit strategy covers both scenarios. The reason you want to have an exit strategy for both scenarios is because you want to have control. Control is super important when it comes to investment, especially in a market that is very volatile. So, starting with why. You want to have control with an exit strategy because you don't want the market to ultimately determine what happens with your money. At the end of the day, you've done all of this research into the different things you're investing, and you want to make sure you get the returns that you deserve. So how can you limit your losses? Number 1, there is something called a limit and stop order. So a limit and stop order works in a trading market. For example, here, you bought $100 of Bitcoin at the price of $25, and you would like to sell that Bitcoin once the price hits $20. So that is a stop loss in this case. When it hits $20, you're basically telling the market that, hey, at this price, I'm no longer willing to hold this asset. So the beautiful thing about the investment world today is everything is on a computer and it can be automated. So even if you're sleeping and you have a stop loss order, it's going to fulfill. Meaning when you wake up in the morning and the price goes down to $2, you would have still sold at $20 because you had a stop loss. A limit works in the other direction. If, for example, the price reaches $50 and you say, okay, at this price, I want to sell and take my profits. Super important, powerful tools that you should have in your arsenal as an investor. The other method is a step-by-step method. So let's say you're not as well versed in knowing what numbers you want to necessarily sell at, right? And the market continues to go up, you sell a percentage of it. So let's say today the price of Bitcoin currently is sitting around $37,000. So a step-by-step would work. Let's say tomorrow it went up to $40,000. And I say, oh, wow, okay, I like that $40,000. I'm going to sell 10% to take some profits. And then the next day it goes up to $80,000. And then I sell 20% to take some profits. That is super powerful because that way over time, you're able to skim some profits, right? And if the market was to go back down, those profits that you have, you can use to buy back if you really wanted to. The other method is the initial investment return. So let's say you invest $1,000 and it manages to double. What you end up doing is you take out your initial $1,000. So that way, at the end of the day, the worst case scenario is you breaking even. The third mistake that people make is not understanding the market charts. Market charts are super, super important because they give you an idea of how the market is moving and what is happening. So currently right now, just from looking at this, I can tell that the cryptocurrency market is moving in a sideways direction, right? So this is the case because, as you can see, the lows here are being broken slightly, right, when it comes to the market cap and the value. But overall, it's just went through a downtrend. The important number that I always talk about when it comes to support lines that we have to pass, very, very recently, the most recent support line we do have to pass in the market is around $1.8 trillion. And I've made a video about this in the past, but if the market reaches $1.9 trillion market cap, it breaks this previous support line, meaning that the cryptocurrency market is going to go on another bull run. As if you draw a support line from the bottom here all the way up through the lows and the lows and the lows, you can see that this right here breaks the flow of that uptrend, right? So in order to go get that uptrend momentum back, this would have to break this support line right here. So going into a little bit more of some numbers that I just kind of wanted to show you today. So there's something having to do with the market as well when it comes to moving averages. So moving averages is basically the average of the prices of the assets in the past 50 days. And then there's something else called exponential moving average. And I don't want to get too detailed in here, but the most important thing I want you to take out of this is a pattern here. When the red line, meaning the exponential moving average, goes under the moving average, as you can see, it goes into a sell. And then when the purple line here, the moving average, goes under the red line, the exponential moving average, you can see that it goes into an uptrend. So here slightly, we can see the purple line kind of goes down, it goes sideways for a bit, and then generally right here, the purple line and the red line, purple line goes under, and then it goes boom, straight up. And as you can see here as well, I'm going to zoom in to give you better context here. As you can see here, the red line slightly dipped under the purple line, and you can see the sell-off happening here. So that's something really, really tiny that it's not always going to be super, super accurate, and it's very hard to see when you're in the moment of it, but it's something that you can also add to your arsenal, something very small, but something super powerful in terms of how you can swing your decision. So if you were struggling with making a decision whether to buy or sell, this is something that you could look into to see how this works out. Another example here, you can see that when the red line goes under the purple line, it goes into a sell, which is the reds that we see down here. And then when the purple line goes under the red line, we can see that it goes into a huge exponential growth, right? So same things down here. The purple line goes under, it goes straight up, right? So keep those things in mind. And yes, even here, it goes down slightly, but overall, it's higher than where it initially started off, right? So those are the numbers to be paying attention to. It is the moving average is super, super important. It is the average price, and as you can see, that is an uptrend, starting to kind of slow down a little bit. So this is something to definitely pay attention to. The fourth mistake that we're going to talk about today is falling for the hype. The thing is, if it's already on the news, it is likely that it is too late. So I'm going to talk a little bit about Dogecoin and the SNL Elon Musk appearance. And everyone was super, super excited about Dogecoin. Dogecoin was the most searched thing on the internet in the first week of May. Super, super crazy month for Dogecoin. And as you can see there, it went all the way up. And then I had so many people hitting me up, hey, should I buy Dogecoin on the first week of May, like when it was at an all-time high? And I was like, oh, well, I don't know. Do your due diligence, but I'm not too sure. It seems like it is super, super inflated. There was a lot going on around it when it came to news, and there really isn't any super value behind any of that. The technology just isn't ready yet in order to have that value. So whenever you see something like this, be careful. And investing in Dogecoin right now, if you have a 10-year horizon, well, it's definitely undervalued for a 10-year horizon. But the thing is, you have to understand the horizon that you're investing in. I am also victim to falling for the hype sometimes. Like, I bought Ethereum when it was a little over $3,000, and as you can see, Ethereum is around 2,600. But generally, I believe in Ethereum in a long-term horizon anyway, so I wouldn't plan on selling any Ethereum unless it was above the $10,000 mark, right? And that's going back to our second point, which is a exit strategy. My exit strategy when it comes to Ethereum is at least $10,000 is when I would start considering taking profits. So when is that going to be? This year, next year, 3 years, 4, 5, 6, 7, 8 years from now? I'm not sure. But when I initially invested, I invested with the mindset of I lost the money and I wouldn't get the money back. The fifth mistake to be making in this market is buying every single altcoin except Bitcoin because it is too expensive. So, breaking news. Bitcoin is the number one cryptocurrency. It is going to be the digital gold asset of the cryptocurrency metaverse. This is undisputed. It has so many support, development, everything. It has a foundational network effect. This cryptocurrency is not going anywhere anytime soon. If you're looking for a sure guaranteed bet in the cryptocurrency market, this is definitely one to be holding in the long-term horizon. If anything, it dominates the market. It tells the market what to go in, what direction to go in. When Bitcoin goes up, generally the entire cryptocurrency market goes up. When Bitcoin crashes, generally the entire cryptocurrency market also takes a huge hit. So keep that in mind as you continue to invest. Bitcoin definitely is still the market leader. And if anything, if the cryptocurrency market does well, you can expect Bitcoin to also do super, super well. Anyway, that was just my 5 mistakes that you should avoid making in this cryptocurrency market. I know things are super, super crazy. There's a lot of information going around, so I just want to make sure everyone listening to this video has a clear idea of how they should be going about making a strategy to approach this market. Anyway, it was your boy Elijah coming to you with a quick video. If you like this video in any fashion, make sure you smash that like button because it helps me continue to make amazing content like this for you. If you're new to this channel, make sure you consider subscribing because we're always going to be bringing you valuable content surrounding investing, specifically in the cryptocurrency market, especially in the stock market as well. Thank you for stopping by, and I'll see you on the next one. Peace.
Don't speak to no one but the facts to the masses.